Got about 12 and a half minutes to the close. Looking to sell a butterfly at the 20 strike, 53.20, the center strike. It's a 15, 20, 25 butterfly. I have a price of 210. It's currently trading around $2. Let's see if we get filled on that. And we have 12 minutes to go. Let's see what happens. So we got 320 and $22. Not exactly close enough. Close, but not close enough. And now minis are trading at 41. SPOO's 18.30. I'm getting close to getting filled here. It's trading around $2. I'm looking to get 210. I don't think I'll get filled at 2, so I'm definitely not going to get filled at 210, but I'll keep it in for just a bit extra cushion, the 10 cents. There's just not a lot of movement right now. Market's been quiet all day with a bit of drift to the upside, obviously. Let's see what we got. 45 and 25. Might get filled here. It's just they're not paying up for these butterflies. So $1.40 and 25, $3.40 and 25, 15. Maybe I might get filled right here. And there's 10 minutes to go. 55 and 30. 210's not filled there. That was a close shot. We got 9 minutes and 35 seconds to go to the close. Almost filled. I am filled. So I'm going to buy one and sell one. This is going to be for $1. That's going to hedge off that side. All right. And I'm going to buy one and sell one. And now I need to sell this one for 4. So we need the market to move away from current prices. As we can see here, sold the butterfly, the 53.15, 20 is the center strike, and 25. And to get out of part of the trade, I'm looking to buy the 15.20 back for $1 or sell the 20.25 call spread at $4. Now, either way, if I buy the 15.20, that's going to I'm looking to buy for $1, so it's going to give me a $110 profit and leave me long the 20.25 spread. Now, if the other side gets filled first, so if I sell the 20.25 spread at 4, that would leave me short the 15.20, and I would want the market subsequently to go down after that. Let's see what happens. There's not a lot going on, but maybe I'll get filled on one of these. I need the SPOOs to, the minis are at 41.50, 42. So I need them to rally 5 or drop 5. That'd be fine. Rally a little more than 5. And the drop right now, if we go under 37, I should get filled trying to buy back the 15.20 spread. Right, we got 7.5 minutes left, and all we can really do right now is wait and hope that the market moves away from this center strike of 53.20. And since there's not a lot of vol right now, all I'm willing to do is one lot butterfly here. With more movement, I'd be happy to do more, but this type of market lull just doesn't warrant it. All right. There's a little kid outside that's screaming bloody murder. Someone must have taken her lollipop. Let's get going, boys. It's a little bit of a pop in the minis, 44.25. Let's move this bad boy up. The 2025 is currently selling for about $2.30, and I need another $1.70 in there to get out, get hedged, and cover half the trade and leave me short the call spread, which I would be I would prefer that. I would, if I had my choice, I would rather sell the 2025 and remain short just in case there's, for whatever reason, sell orders come in on the close and they decide that it's time to sell and the market should go down, but we shall see. My 2025 is currently trading around $3. What is it? What do we have here? 310. $3 right now. So I need another $1 on this to get out. That would be pretty cool. Let's see if it happens. All right, 45 in the minis. It's looking a little better. And as we can see right now, we got 340 on the 2025 call spread, and I'm going ask to ask on that. So 440 minus the 75 cents. So right now it's about 360. We're getting a little closer. Let's go up another 1.5 in the minis, and that should about do it. We're about 70 cents away. 350, 370. Yeah, keep going, boys. We need a little bit more of a pop. We got just over 4 minutes to go. Let's get this bad boy up there. Let me sell this for $4, make a little bit of money. Let's see if we can get out. What do we got right now? 60, 55, 55, 355, 345, 345. We need more of a pop, so we need the minis to go up to about 47, 47.5. I should probably get filled for sure. Not doing it just yet. Hopefully we will. Going back down, now we're at $3, so that's not the greatest. Looks like the rally petered out. But we still have 3 minutes to go. Let's see, in 5 seconds. 3, 2, 1, 3 minutes to go. All right, we have the spread trading for about $3, 320. I need a bit more. 310 on this spread. I needed it 4. Let's get the minis up. Just 2 handles, boys. That's all I need. Just 2 handles. 2 handles is all I need.
Come on, 2 handles.
2 handles. Come on, 2 handles. 2. That's right. That's the spirit. No, just up right now. 2 handles up. All right. That's the spirit. So let's get this up another 1.5. Running out of time here. We got 2.5 minutes to go. The close. Let's get it up there, boys. So now the spread's trading at about 370. If I lower the price, I'll get filled, but I'm not going to do that. I wanted to keep going. Let's go up another handle, and I should get it 380-ish. 380, 390. Let me get this $4 here. 395. There's $4, 410. Come on, boys, get me out. $4. $4. Don't peter out on me now, boys. $4. All right, so I'm going to cancel this order. All right, so what I am left with, notice that I sold the butterfly for 2. All right, then I sold this 2025 call spread for 4. So I have a total of $6 in credits there. So if the market closes where it, let's just say it closes at 53.25. So this spread, the 15.20, would go out for a full loss of 500. But I collected $600 in credit. So no matter what happens, I'm going to make at least $100. Now imagine that the market drops for whatever reason. Gazillion sell orders come in, and the market goes to 53.10. So then I would get max value on this call spread, which it would go out worthless, and I would collect the total that I sold it for, which is going to be roughly around 350. Let's take a peek at the prices here. Hey guys, in order to make the trade, the individual components of the trade a bit easier to follow, I migrated over to Option Creator so that we could see the prices more clearly and get a visual of a graph of the trade. So the original trade was selling a butterfly. The first call I sold was 53.15, and then I bought two at 53.20, and I sold at 53.25, and this was about 9.5 minutes before the close. Here are the individual prices, and as you can see, I collected a total of $2.10, which is $210. 100 times the multiplier for this is 100 in the SPX. So anyway, if we take a gander at the chart here, we can see that the center strike is at 53.20, and that's where the trade loses the most money, which would be the width of the strikes, which is $500, minus whatever credit I received, which would be $210. So the max loss on this trade would be $290 if it would have pinned at 53.20. So what I'm looking for when I establish this trade is for movement away from the center strike, the shared strike of 53.20, so that I can wiggle out of the trade and leave myself with a hedged position and something that can make an extra $500. And how does that work? Well, remember that what I actually did to wiggle out of the trade was I sold the call spread at 53.20.25. Those are the strikes 53.20.25, and I did that for a total of $4. So note that the total credits that the trade brought in, selling the butterfly and then selling the 20.25 call spread, is $610. And what does that leave me with? Well, it would leave me short the call spread of 15.20. And what happens in this case is that no matter what, my minimum profit is going to be $110. Remember, I have a total in credits of 610. So should the market close anywhere above this area, all right, the 15.20 call spread, which is part of the butterfly, would go out at max value, which would be a $500 loss, but I collected $610, so I have a minimum profit of $110. Now, once I hedge off part of the trade, and in this case I sold the 2025 call spread, I still have this 15.20 call spread, which is a short call spread. All right. So would the market have, for whatever reason, gone down quite a bit, all right, at least past the 15 strike, then I can make an extra $500 on this trade. And how does that happen? Because the call spread that I'm short would go out for a value of worthless. So I would end up collecting whatever I sold as far as credits, which in this case would be roughly let's actually check. Notice that I sold the 15 for $5.14, and I bought the 20 for $1.68. Remember, as part of the original butterfly, I bought the center strike twice. But anyway, this is $3.46. So what would happen here is if the market would have tanked for whatever reason, lack of a better expression, I'll just say tanked, I would have collected the extra $364. But you say, wait a minute, you sold a butterfly for $210 and then you collected extra $364. That's not $610. Well, there are two ways to look at it. Well, there are a couple of ways to look at this. One simple way is you can look at this short call spread as a synthetic long put spread. Now, remember the videos where I discussed box trades and put spread is a call spread, and a call spread is a put spread, yada, yada, yada. Imagine that this is a synthetic, well, it is a synthetic long put spread, and you would get the full value on this put spread from 20 to 15 of $500. So that's where the extra 500 comes from. That's one way of looking at it. And let me reset the zoom. The other way of doing it is you can break down the original components of the trade to get a bit of a more granular look. Notice when I sold the butterfly, the call spread component that I bought, buying the 20, selling the 25, that cost me, looks like $1.36. And then I sold that at 4. So that's a total of $2.64. All right. So I have $264 there. And then if cash would have closed, let's say at 5,300, so I would have ended up collecting the full value of what I sold the 1520 call spread and adding that to the profit from the call spread of 2025, buying and selling that, then that total gives me $610. All right. If you need to go through the math again, I highly recommend doing it because the benefit of that is understanding the trade well, how the individual components work together. Buying it for $1.36 and selling it for 4 is $2.64, and then you add in the 346, and you end up with a total profit of $610 if the market would have been very kind to me and closed on the downside, at least or below 53.15. At 53.15 or below, I would have collected the extra $500 there. Okay, so min profit, the way I set it up and structured it, 110. Max profit would have been 610, and all of that was done with a little more than 9 minutes to go for the close. All right, I hope that was helpful. Thank you for watching. If you think someone can benefit from the video, please share it with them, and don't forget to like and subscribe. I'll catch you guys later. Good luck trading.